Brad Thomas here with the Intelligent REIT Investor here at Recon 2014 here in Las Vegas. I'm joined today by Bobby Taubman, the chairman, CEO, and founder.
Well, my dad's the founder. We founded the company. He founded the company 64 years ago. I've been running the company for maybe 30 years or so, and we went public 22 years ago.
Right.
And I've been chairman, president, CEO for quite a while.
Great. So Taubman turned in a pretty nice report card, first quarter. I'm really amazed with the increase in rent per square foot. You're up to $50.21 per square foot. That's a 3.6% increase. Let's talk about your earnings and the trends we've seen really since the recovery.
Well, I think we've always told people to focus on average rent per square foot. Some people look at lease spreads and some people look at sales trends, and the sales trends are all important metrics, but the key metric to us is the one that you mentioned.
Right.
You know, what is average rent growing on a steady basis? And it's been growing at 3-4% for a long time. We've indicated to the investment community that should continue to grow on that basis, at least as we see through 2014. So we're pleased with the growth. There are lots of headlines out there about sales. This was a very tough winter, and there's no question it impacted everybody in the regional mall sector. The customer was frozen. Many people talked about that. But you know, at the end of the day, average rent of the portfolio keeps growing. It grew to 3.6%, and that is a real indication of health within our portfolio.
Right. You know, it's really amazing. I mean, a lot of people have talked about the death of malls, and you know, here at ICSC and really at your booth, I'm just seeing an amazing pipeline of deals. You've got 6 projects underway right now, which is an incredible pipeline of development. Can you talk to us about that?
Sure. Well, we have 3 projects here in the United States. We have Sarasota that we're opening October 16th of this year. We've announced to the public that we're over 90% committed. More than 50% of the tenants will be unique to that market of Sarasota. We're just thrilled with the way it's going. We got Saks, Dillard's, and Macy's in that shopping center. About a year from now, at the end of March of 2015, we're opening in San Juan, Puerto Rico with the Mall of San Juan. Our anchors there are Nordstrom's and Saks. Again, we've said we're very pleased with the leasing. We've announced that we've signed leases with Louis Vuitton and Gucci just as a sense of the high quality nature, the luxury component that we're going to have within the shopping center. This is about a 700,000 square foot shopping center. It's moving along very, very well, and we expect to be very well leased at opening. We've also announced in Hawaii on Kalakaua Boulevard, which is really the main drag of Waikiki, we're literally on the 50-yard line. We have Saks anchoring our center there, and we're really going to be part of this street. There's 28,000 hotel rooms within a mile. There's 40,000 people a day on average walking on that street right in front of us. We're going to be opening in 2 years, in the spring of 2016. So we're very excited about those 3 projects. We also have 3 in Asia that we've been working on. We have 1 in Xi'an, 1 in Zhengzhou, and those 2 in China, both million square foot centers. Wafujing Department Stores is the leading department store in China. They're both the anchor in the project for about half of that million square feet, and also our partner in the project. So we're very pleased on those 2. They're both under construction. They're both meant to open in late 2015. We are also working in South Korea, project in Hanam, which is about 10 miles east of Seoul. That project is 1,700,000 square feet. It will be anchored by Shinsegae, which is the leading retailer really in that market. And they're also our anchor, they're also our partner as well as our anchor. That project has just begun leasing and is going to open in late 2016. So 6 very significant projects. When you add up their total investment, it's $3.5 to $4 billion. Our share of that is less than $2 billion, and we're very excited as we add this external growth onto our organization at this time.
Great. Last question is a dividend. I know that's all important, especially for us retail investors today. Your company just recently in March announced an 8% increase in your dividend. You know, the safest dividend is the one that's just been raised. Let's talk about the dividend.
Well, we're very proud in our 22 years as a public company. We've never cut our dividend. We've never turned it into stock. All of our peers are not able to say that. We have grown the dividend 17 out of those 22 years. In the last 10 years, our growth has been over 7% compounded in the dividend. We do think that it's a very predictable income stream when you have thousands of tenants in a portfolio like ours that are doing a lot of business, very productive, making money. All of those individual tenants make it a very granular income stream and very predictable. So it's easy to see how that dividend is very safe, and it's proven itself over now 22 years. So again, we're very proud of our record.
Great. Bobby, it's always good to see you.
Nice to see you, Brad. Have a good convention.
You bet. Brad Thomas from the Intelligent REIT Investor.